Hello, everyone. Thanks for joining. So, I know we have been thinking about quite a few issues, around the economy, and our topic today is preparing for the next recession. I have actually done this 3 years back here in Seattle, and now we are here. And a lot of them that I presented 3 years back, and also presented this one 1 week back as well. So we look at quite a few things, and some of them are already here. So overall, we are going to focus on, this is our agenda today, recession and causes for recession, economic indicators for the next recession, and how we should be balancing our portfolio, like in general, portfolio management and diversification, how one should be doing it, and preparing for job loss. Next, preparing for a stock market crash or preparing for a real estate meltdown, handling business struggles, and then how to handle emotional stress when things go wrong. And will there be any opportunities during the recession? So we will be talking all of this today. And at the end, we'll be talking about, obviously taking all the questions. You guys can chat in the section. Otherwise, you can ask at the end. I request everybody to mute your phone, please. Or if you are joining on the phone or computer, please make sure you are muted so that we'll not have any disturbance. So I know we have been talking about recession, and a lot of economists are talking about it. So what is the recession, and how can we prepare to it? So that's our topic. So at a high level, the definition is, recession is a temporary period of stagnant or significant decline in economic performance spread across the economy. So we don't see that exactly right now, but that's at a high level, that's the definition. It is generally identified by a fall in GDP in 2 successive quarters during which trade and industrial activity are reduced. So today I'm going to share some of the data as well, so that you have it. So Statista is a very good website for a lot of statistics. You can use this website for many things. And if you see last quarter, we were at a negative GDP. Let's hope this quarter will be fine, but this is one of the criteria. If the GDP is falling while prices are going up, and there are, like wages are going up, and there are various things, but GDP is a key factor, because that's what the real, productivity or the real value is for any country. So usually the recession, you can expect after an economy reaches a peak of economic activity, which we have seen, even though our GDP did not grow much in the last couple of years with the pandemic and so on. However, definitely we can say that we have reached peak economic activity. I will show you some statistics on that too, and then you can understand it. So like I was mentioning, these were the causes for recession, which I presented 3 years back. Number one, highest interest rates. This was not the case in 2019. For example, what I mean is, so in Seattle, I was presenting this. This is in June 12, 2019. That's when I presented first time this presentation. So the first one is high interest rates. When I presented in 2019, it was not there. Now we have it already. Inflation, nowhere we could see in 2019, for example. Now we have it already. So 2 already kind of checked here. Reduced consumer confidence. Right now, we don't see exactly, but that's another causes for recession. Reduced real wages. This is not happening. It's actually going other way around. If you have seen either salaries or in general wages, contractual wages, or what. I mean, there are basically two jobs for every single available individual for a job. So it's like a 1:2 ratio, 1:2 ratio right now. So the wages are quite good at this moment. So that's not happening at other factors. Housing bubble. I mean, no, I don't. Maybe we are there. I mean, but we don't have a housing bubble yet. I mean, that was the main cause last time. I mean, when we had a recession last time. And the wars, I mean, that could cause recession too. So not everything need to also checked out too. Even one big, like last time, housing bubble caused recession. I mean, we already have a war going on with the Ukraine and Russia. I mean, tech bubble. Nasdaq definitely have seen, kind of, at least a mini bubble burst, tech bubble, which definitely we were expecting. So these are the main causes for the recession. I mean, so a lot of us always wonder why we have such an inflation, and the federal government has been telling us, but not now. I mean, if you have seen or if you have heard in the news, I mean, they have been saying transitory, which was like surprising to me. I mean, it cannot be transitory. The main reason we have inflation is because when GDP was not growing at all, I mean, it's not to blame anybody, but it's a main cause also. The cause of inflation is during the pandemic, to save lives or to save businesses, federal government has printed, not only our United States government, many Western countries especially, if not India, many governments have printed a lot of money. I mean, sometimes it's like, is it for the need, or I mean, or is it for the greed? I mean, anyway, so governments have printed more than what they are supposed to, at least in my opinion. We have seen PPP money and so on. So there was so much money printed. Along with it, government has kept rates very, very low. What did that do? If somebody have a $250,000, they could buy a house for $1 million. So $750,000 government is adding on top of stimulus money. So that means a $750,000 is adding. I mean, basically in the last couple of years, this money was being added, and it was at low interest rates. People were able to refinance left and right and borrowing the money, investing in Wall Street and so on. So all the money that was added during the pandemic, either it is a PPP money or stimulus money or whatsoever, but it's not one bucket of money. There was a huge money came from federal government in various ways, either it's stimulus or from loans and so on. It all added to the economy. So what happened? Everything came to, I mean, obviously some of the people's accounts. I mean, so we were flooded with a lot of money in the economy. So people had a lot of purchasing power. I mean, we always talk about there is so much demand. Why would there be a demand? When you have a money, then only there will be a demand for any products or goods or services. After all this, now federal government realized, okay, we now need to reduce the money in the hands of companies or the people and so on, or adding it to the economy. They're actually not taking back the money that they have added, but they're actually controlling it to add it to the economy. So that's the main reason. I just want to give you a little bit about inflation. I mean, why we are here. I mean, of course, there are other reasons too in the pandemic. So there are certain goods and services and homes. I mean, everybody wanted to, buy homes and stuff. But the point is, if you don't have, I mean, if an individual or a company do not have a purchasing power, there will not be a demand. If there is a demand and the supply is not able to reach the demand, then the price of goods will go up, and which we have seen too. And because of that, we have inflation as well. High interest rates, definitely now we have seen. I mean, that's a kind of needed, in my opinion. So based on whatever has been happening. So now let's look at the economic indicators for a recession. So let's go by one here. Inverted yield curve. So what is inverted yield curve? So here we are talking about treasury yield curve, which is flattening, meaning short-term interest rates are moving up closer to or higher than long-term rates. So short-term rates are basically higher than the long-term. So there is no much demand, for 10-year yields, for example. So often it's a sign Federal has hiked short-term rates too high, or investors are seeking long-term bonds or riskier assets because they want, long-term bonds, for example. And when this, right now, where are we? So let me quickly show you where we are at. So here, this is 10-year treasury minus 2-year treasury, and we can pick, for example, 5 years. Right now, it's in 5 years. So it briefly touched in April like a negative, and then we are close to the flattening. So we are not negative. So it need to invert. Invert means it need to be negative. So like I mentioned, so we were negative here, but we are kind of a little bit positive, but we are close to the negative or close to the zero at this moment. So average months until recession, this exactly not if it is definitely these months, but this is this is the source that I received all this data, and I have verified a lot of information. It's pretty good, so I thought I would share with you guys today. So it's like, okay, once it starts flattening or going negative, inverted yield curve, it can take 15 months until a real recession we get into. So we may have a more time, definitely, but this is just a more an educational session that we wanted to do. However, like I mentioned, where are we now? We are still at a flat. And the next item is corporate profits, declining from cycle peak. If you have seen, definitely we have been hearing from quarterly reports, the guidance has been going down. So when profits decline, business cut investment, and we have been seeing some of the companies already cutting their employment openings, and not wages yet. With the recession and all, a lot of companies are adding wages. But it could take another couple of years. On the corporate profits, once it starts declining. So so definitely corporate profits currently have peaked. That we have seen in the last few quarters. Everybody have shared very good results, not in the last quarter, but in general. And the other indicator is unemployment. So right now we are pretty good. Our unemployment rate is close to 3.5, I think. So so definitely, if unemployment starts raising, then we need to see. Right now, no. So consumer cut obviously the spending. If there is an unemployment, so we are definitely at a low right now. Unemployment. We don't have an unemployment yet, but that's one of the economic indicator. So, and housing stats. So we have been seeing, at least for the last few weeks, I would say. Housing has been going down a little bit, or slowing down at least. More sales are coming in the market. So definitely, I believe there will be slow in housing growth. Again, if we go into the deep red, it could take a few more months to get into recession. So yeah, leading economic index. So this leading economic index, it has a lot of items in it. Wages, a lot of CPI and a lot of data. It's all together, it should be declining. But right now we are doing pretty decent at this moment. So we are not there yet. So that is doing overall fine. So no issues. So some of them are checked, but these are the main indicators for the recession. So if things go wrong, what could happen and how we can be prepared? So the first item is preparing for the job loss. So this is what I think important things that we could be. So number one, I know a lot of us, we have bought good homes and, mortgages, we have mortgages to pay, monthly expenses to pay. So the most important thing we all need to think about is start stowing away cash to give yourself a financial cushion, an emergency fund in case someone get laid off, basically. So we do not know when things go wrong. But definitely it's in your hand. I mean, at least, I mean, there is a saying, always cash is a king. So, I mean, definitely, you can definitely make sure, I mean, you have a very emergency fund that can at least give you at least minimum 6 months, 1 year. I mean, 6 months to 1 year, have that cash so that you can take care of yourself and your family. And when unfortunately when things go wrong, I mean, we don't want to foreclose stuff on various things, right? We have. So even if it is for a business, I mean, having a cash in hand absolutely helps. And absolutely, the second item is get a side gig. I know we all are busy working for our companies, our employers, but at the same time, many of us have our own passions. I mean, when you have your own passion, right now with the pandemic, now we are blessed with working from home in many things. So if you have a passion, you can put it to a test. I mean, there are great websites where people hire online. I mean, freelancer.com, upwork.com, or Craigslist, TaskRabbit, or Fiverr. I mean, you will be surprised. I mean, we have properties in multiple states. I mean, I heard, I mean, even some of the Indians, I mean, able to do like a handyman jobs. I hired one, one recently. I was personally surprised. I mean, he makes $100 a day. I mean, it's an additional income. I mean, even photographers. I mean, one of the photographer who made our video, like housewarming video, for example, I mean, he makes pretty decent. I mean, as a side gig. So we can always postpone these things, but you can also test them. So work on your passion and see. I mean, it's like AWS for Amazon, right? It could be a byproduct, AWS. Now, I mean, with so much inflation, I mean, Amazon profits are like, slowing down on retail. I mean, AWS may be saving better than retail. I don't know. I mean, for example, I'm saying. So you never know. Your side gig may even save you. I mean, either in recession or even that could be your main income source. So definitely try to work on that. I mean, new skills. Obviously, unfortunately, or if most of us are, many of us are like into technology. I mean, definitely we have to update ourselves. I mean, and have an issue at your workplace. I mean, just because everything is okay now doesn't mean that it will be okay. I mean, so the last but not least, again, hang on to a stable employer. I mean, I know there are a lot of jobs out there. I mean, what if you change to a new job? Again, these are only some of the things to, I mean, think about it. It doesn't mean that you have to completely follow everything that I'm sharing today. And these are only just, from experiences or, things that you can be prepared. That's all. I mean, to keep in mind. So I mean, if you are hanging on to a stable employer, even though you don't like some of the things, when things go south, I mean, you may be better off hanging on to a stable employer. Let's say, I mean, if somebody join a new employer, and when things go south, I mean, if people need to be laid off, we don't know. They may be picking some of the people who are newly joined. So, I mean, just keep in mind, I mean, it doesn't mean that you should not change your job, I mean, in any way, but I mean, sometimes stability is definitely very, very important during the recession. I mean, especially with the pandemic, I mean, either CFO or CEO their goal will be only one thing. Okay, how can I cut down the cost? I mean, can I replace employee with someone else? It could be in Mexico or Thailand or India. It doesn't matter. I mean, if a CFO or CEO decides to reduce cost, maybe they will. I mean, so because they don't have the money to spend. I mean, what can they do? So they need to take care. Most important thing when it comes to your financials, now we are talking about your financial portfolio here. Don't put all your eggs in one basket. I mean, this is a famous saying, right? I mean, if the basket fell, I mean, all the eggs are gone, basically. I mean, of course, it's easy. I mean, but that's in the investment language. How does it translate? So don't keep all your hard-earned money in one type of investment. So I know a lot of people, you may have seen like crypto. I mean, especially we have seen, some of the cryptocurrencies fell down drastically, but some people have invested all their hard-earned money earnings in the crypto only, or in the growth stocks, for example. When I say growth stocks, we can talk about it later, but there were a lot of stocks that were speculated, in the last couple of years, IPOs, SPAC. People kept all their earnings. Not everybody, some of them. Then what happens when you don't have a diversification? So you lose a lot of money. When you keep it in one type of investment, when there is no diversification. So try not to do that. Don't put everything even in real estate. Even though real estate is good, so no, things may go south, and you may not be able to sell your real estate because you have seen so much good, and then you don't want to sell it at low. Like definitely portfolio management is important. You could move higher risk to the lower risk, or the medium risk. In previous webinars when I did it, people ask, what about my 401k? Even 401k, you can probably go to a more balanced, or like a lower risk, lower risk funds. Instead of focus on balanced funds rather than complete riskier. Even if it is, again, these are only just some of the suggestions. And plan selling high growth assets. Let's say you have some of the assets. When I say plan, you don't have, you can, but at least when there is an asset which is really, really profitable, it's okay. If you can sell it and sit on the cash, you may have a great opportunity to get the same asset or a same stock at a, let's say you sold, I'm just making it up, you sold a home for a $500,000. The house was $250,000 when you bought it. So you have a 100% gain right now if you sell it, but you can sit on that, cash, and then you can buy the same house maybe for 400,000. We don't know. Or you can buy some stocks at a really, really good rates. We'll talk about it quickly. But I'm not suggesting you need to sell everything. It's just a portfolio management. How can you have a decent emergency fund? Or if you are thinking about, you have been hanging whether to sell or buy. For example. Invest in more liquid assets. We strongly believe next couple of years, gold ETFs or silver, they may pick up pretty decently. Again, that's not like a gold doesn't produce anything, but it's like a safety net. Inflation or for hedging, people will go after them. So if really recession happens, these will pick it up. So you can try thinking about it as well on that. So how to diversify? Again, everybody have their own risk appetite or risk profile. This is just an example. Not everybody need to have 100,000 or somebody have $1 million or $10 million. But this is just an example. That's all. So how should you diversify? What is meant by net worth here? Net worth means all your asset values minus your liabilities, whatever you owe to the either vendors or on the banks, whatever you need to pay. So your assets minus liabilities, it's like a net worth. So that is the net worth. Let's say if you have 100,000 net worth, how should you invest it? So you can invest at least 45,000 or 45%, into the real estate, because it's a stable, it's limited. You cannot print real estate. You can print money. You cannot print real estate. You can only build real estate. It's definitely a good asset class. If you have seen any hedge funds or billionaires, everybody have real estate as a good portfolio. There is no doubt about it. Because you can only build certain homes or number of homes in a location. You can't build left and right, whatever we want. Land is limited, right? For example. So definitely that's a good asset class. And then if you have your own business, you can invest in your own business, because that's your business. How you can invest in your own business and make money, or make it grow. Or if you don't have a business, equities is a good place to invest. So 25% of your net worth could go into businesses or equities. One of them or both. Depends upon how your portfolio is, how you like. So that's definitely important. We kind of reduced, but now we increased precious metals. In the last couple of years, they did not give good, but I think precious metals is a good one to pick it up. From the diversification point of view again. So especially if you are not open to or into startups, that money can go in. 10% of money can go into 10 startups, for example. It can be put in. There are some funds that manage. Different. They invest into different companies. So investing in startups is not a bad idea, but you are at a risk. 70% of your money can go. Because some startups fail, but even if 2 or 3 startups succeed, so you can multiply it like 10x or 20x easily, for example. So, but you will expose to, that ecosystem, but it's not an easy one to get in, but that's one you can get into. So, and then crypto, so what, we had it recently, to be honest, crypto. We were not so much of a bullish in a way, but crypto, it was a pretty, definitely it has a place in the portfolio, no doubt about it, because any hedge funds or any billionaires, everybody have now asset in the asset classes like this. In their asset classes, crypto is one of the asset class. So definitely it is its own niche. Even though a lot of people thought crypto will be like hedging, that did not prove to be true, but definitely it can pick it up later. So like 5 to 10%, maybe you can keep put. 10% might be high, I think, in my opinion. But if you're a risk taker, you could take it. So in the crypto, so stock market crash. Stock market. So did this really happen? Yes, definitely it happened. However, I wanted to show you an important data element here. So very rarely this information is checked out. United States of America, total market capitalization of US companies, all the companies that are listed. This is also one of the good website. So see it. I want you to pay close attention here. So in 2019, that means like ever since Wall Street started, like 200 to 250 years before, it took around 200 years to reach $33 billion, our Wall Street. But like I mentioned, we added so much money, everybody have money to play on Wall Street. Within 2 years, we are so great to bring it to $53 trillion valuation. It's to trillion. So 33 trillions to 53 trillion. That's compared to the GDP, that's a huge, I think it's around 1.5% of our GDP or something. It is scary. It took only 2 years to add a $20 trillion to our Wall Street. How was it even possible? It was only possible because there was so much money with the stimulus. There was so much cheap money was available from the federal government. So there was a huge, left and right. People were buying any stock, anything, everything, basically. So definitely it was at a peak. It needed to be correction. If you came to our last time, our value investing webinar, we did show you, you can be, when things goes that crazy, you can be bearish. It takes it takes an art to be a bearish. But when things what I'm trying to say is, do you want to be bullish when things, going up and up for no reason? A lot of IPOs are 10x, 10 times. They never proved a 10x revenue or whatsoever. You need proper, what do you call, planning, or however, you don't want to be always bullish. That's not possible. You need to be bearish when the stocks are bubble, at a bubble, or I call it as bubble stocks. Definitely there were a lot of, I'm not going to go into deep, but there are a lot of stocks. We have done a lot of trades. If you go to our IIG WhatsApp group, we have shared value investing webinar. Anyway, so definitely you should check that webinar too that we did. So this was expected, but are we prepared? I mean, at least for us, it helped. A lot of puts helped for hedging. I mean, very, very few advisors were suggesting puts. Everybody was bullish. I mean, it can be bullish when the stock is 10x, for example. So definitely we need to pay attention to the economic news. I mean, we have seen a lot of billionaires in the end of the last year were selling. Even, I mean, Satya Nadella, I mean, even a lot of people, I mean, Bezos, Elon Musk, I mean, a lot of people were selling. They were giving a signal, but very rare we try to, I mean, pay attention. But try to pay attention to the economic news or what is happening. I mean, but again, don't buy everything that you read it. I mean, that's the thing, right? I mean, we think everything, I mean, okay, if somebody wants to buy some coin, we are going to buy that coin. I mean, no, that's not how it works. I mean, so we should focus on, what kind of, things you need to believe in, I mean, stuff like that. I mean, so definitely, like I shared before, the leading economic indicators, pay attention to those. Those are important. I mean, look at the good websites. I mean, like I shared some of this, and then try to plan. I mean, like we wanted you guys to prepare if you can for the recession. I mean, but again, don't be panic. I mean, being panic is not going to help in any way. So yeah. So what are the other ways preparing for market crash? I mean, start selling profitable positions. I mean, if you have really good profitable positions, I mean, you might be surprised. I mean, even though, like, for example, Google is one of our favorite stock, for example. I mean, in the month of December, I sold at 2,900. I mean, I picked it around, I mean, we averaged around 1,100 or whatever. But I thought, I mean, this is enough. But I do know that Google is maybe a $4,000 stock, but I know that there is something coming. I mean, we sold it, but it did go to 3,100 or whatsoever, but it's okay. I mean, even if we miss the boat, I mean, we have other boats that we can, I mean, value stocks that we can go. What I'm trying to say is don't be emotional to a company. Either you're working for that company or you just love it. I mean, a lot of people, oh, I love this company. I'm just not going to touch it. I mean, I understand that sentiment, but I mean, Satya Nadella, do you think he doesn't love Microsoft, but he sold his stock? But he has advisors. Of course, you may not have the same level of, advisors or whatsoever. We are help. I mean, but you need to exit. I mean, when the time is, we wouldn't know when the stock is at the right time to exit or right time to enter. Nobody knows, even Warren Buffett, right? I mean, nobody knows the peak or the bottoms. I mean, no, but definitely based on the fundamental analysis, I mean, you can see, I mean, what could be correction. I mean, correction coming, which stocks could be basically like growth stocks. I mean, definitely that was, I mean, it's definitely crystal clear, at least for us. I mean, so sell some profitable positions or cut some losses. I mean, so I mean, we don't believe at least 80% of the growth stocks are not coming back. Now people believe it. I mean, how could we not believe it just 6 months back? What did change? Not much changed, just because all the hedge funds probably cashed out their profits and nobody's adding anything money onto it. I mean, everybody expected after Amazon split, Amazon is going to go somewhere. Okay, because once Amazon stock is $100, everybody thought people are going to buy left and right, whether it is Wall Street bets or whatever you call. Did it happen? No. What does that mean? We retail investors is not a real addition to the Wall Street. It is a hedge funds, billionaires. They are the one, catalyst. We are not the one. Even whether it's Amazon split for $50 or $100, if billionaires and hedge funds and our 401k money is not invested by the funds, we can't. I mean, what I'm trying to say is, I'm not saying anything negative about Amazon or anything. It's nothing is in our hands. It's in the hands of, big fishes or big boys. I always call as big boys with the billions. I mean, they are the one sitting on the cash. Even Warren Buffett sitting on the cash, for example. So when the money is not coming into the markets, I mean, your stock, that your portfolio is going to hang on for a long time. So not a bad idea to sell profitable positions. Look for a same position. I mean, now we are hoping to add maybe Google at $1,700, $1,800. We don't know. We do some sell puts, I mean, or puts on some stocks. So this one, when I shared 3 years back, I mean, not many believed this. Absolutely. I mean, if you go back, I mean, like I shared in 2019, I was sharing puts and short selling is a strategy. You should be hedging this way. I mean, not many looked at it. but it definitely helped us. And now we are doing more sell puts, for example. So it can reduce your loss, and it can head. Of course, our value stocks are also in red. I'm not saying that entire portfolio will be green, no, but definitely half of it is green because we have a lot of puts are, sell puts, and so it's a strategy basically. But you need to have a stop loss. Definitely, that's a very, very important one, and you need to know where to do it basically. So this is like hedging. And now with the recession, and if people are talking about it and all, invest in stable and dividend paying stocks, even though they may go down more, but don't worry about it. So invest in stable stocks and adjust your 401k. Like I mentioned, so more balanced funds, if you would like. So that's what when it comes to the market crash. Okay, the next one, real estate meltdown. Did it happen? Yes, of course. When did it happen? Not too long ago. We have experienced. I bought my first home in Seattle. It's a very nice community. We bought it at around $500,000, and then it went down to 350,000. We bought it in 2006, and then it went up, and then it corrected like 30%. I used to tell many friends, okay, buy it now. This is a good time. But not many used to pick up the advice, or people love to pay the rent equal to the mortgage. But I used to say better to pay mortgage. But what I'm trying to say is, there will be a meltdown, I think, but I don't know the date and time, and but things have been going crazy. The thing is, our GDP, like I mentioned, is still at the same level. How did this Wall Street stocks, even Apple stock, for example, it took 30 years for Apple stock to become $1 trillion company. It took only 2 more years to become a $3 trillion company, almost. Now it's not. Of course, it got a correction with the NASDAQ correction. Apple is a great company, absolutely. But do we want to pay at a $2.5 3 trillion company? What are the fundamentals? What else we need to look into it? Is it better to cash out mine? And then put in somewhere else where you can multiply more? So coming back, so definitely things. Even real estate, right? Like in some of the areas. It grew like 30 to 50%. So what can you do? If you want to invest in real estate, should you wait? Yeah, probably you can wait. But if it is your primary home, if you have a strong, strong, employment, and if you are sure that you have enough cash, it's okay to buy a primary home. But as long as you are not concerned about what happens, otherwise you can wait and see. So do not invest unless you can hang on to your property until next 10 years. That's number one. And also selling as an option to cut down losses. let's say you are a little bit concerned. You can get out with a good profit, or with some loss. For example, I'm not saying you literally need to sell on a loss, but if you are concerned, for any financial reason, so that's another option. Self-manage your property and have good tenants, even if rent is low. Sometimes we want to increase the rent, but sometimes it's better to have a good tenants, and stable tenants, so that even so it will be win-win situation. Even taking a riskier tenants than having a good tenants. And sometimes you can also look in Airbnb or HomeAway. There are a lot of short-term rental. Now you can do it, but it's a lot of work. But it's, if you have a passion and if you want to do that can increase your potential. Even in real estate meltdown, if you cannot get a tenant, at least you can rent it on Airbnb. So yeah. And small business struggles. What could be the small business struggles? So definitely, right now all the businesses can be all is well, but some of the businesses, when it with the inflation, people are not able to find the good, workers, and goods and services are high. Some of the businesses are struggling to survive. So if there is a downturn, definitely, things can go wrong, and then it could. Some of the businesses may see losses. So what does that mean? So focus on customer needs. just because all is well right now doesn't mean that, I mean, you want your own customer base. You want to have your own niche, I mean, so that at least even when things go wrong, your loyal customers are still sticking with you and you are able to survive. So also have a loyal employees. I mean, even if you pay more, or have patience. I mean, we all have to compromise. We compromise at home with our kids, and whether it's with the husband or a wife or a parents, we all compromise in many ways. Same thing with the employees. I mean, if we are able to compromise with our own family, we can able to compromise with some of the employees too. So what I mean to say is have a loyal employees who can support you and your business when things go wrong. I mean, and know when to exit. I mean, just because, I mean, you want to hang on to a business and you are worried about the society, if you, I mean, so, I mean, but if things are going wrong, it's better to exit and, have losses and, move on. I mean, instead of keep adding more and more losses to your balance sheet. So that's what I would say. And this is one of the personal experiences with family, friends. So I would say stress management is very, very important. So I have seen and in my close circles. Obviously we are in Seattle. So a lot of people work for FANG companies. There is a stress is always there. And on top of it, if there is an economic downturn or a recession, obviously people will be worried about losing the jobs. So, but these are the things that can help you. So tell yourself crisis is a short term. We have seen Y2K bubble, 2007. I would tell you one thing: we have a great, especially the people who are in technology. We have a great, what do you call? Niche skills. I think we should be okay, but keep long-term perspective. Crisis is a short term. Be strong. Situation is not your failure. It's not your failure. But like I mentioned in previous slides, be prepared whatever you can. So that you are prepared whatever happens. And identify your financial stressors and make a plan. If stocks are a stressor, get out of some of them and just close it. Just tell yourself, okay, this is it. But again, I know we can only claim $3,000 loss on a tax return. If we have $30,000 stock loss, that means it's a 10 years stock loss. But I know, there is a tax planning needed. But health is wealth, right? Wealth is not health. Definitely health is wealth. You can do something else if you are healthy. Work on your mental and physical balance. Even now, I know we always postpone. We work left and right, day and night. The amazing thing is we have so much content on YouTube. Either it's a knowledge, financial wisdom, or anything, entertainment, or whatever you want. You have it on your phones. You can walk at least half an hour every day. Tell yourself you can walk. You can have a reminder. Every day. Okay, you can. Walking is not that tough. You can walk for a half an hour. So, but it helps you both physical and mental balance. Especially the mental balance is more important. So the number 5, better to be on meds rather than mad. Or what I meant to say here is when you are in depression, when somebody is in, I'm not trying to point anybody. When somebody is in depression, it's better to be on meds. I have seen some cases, where things were so bad at their homes. When the bread maker is in depression, for example, they don't want to take medicines because they feel that it's embarrassment to take medicine and staying on the medicine. No, even if you talk to any doctors, it's better to be on meds rather than mad or going things completely wrong at your home. You can do better than that. So it's okay to be on meds. So yeah, I'm not suggesting any individual here, but even if your friends, help them whatever you can. So that is a number 6, seek for help and support. When you need help, seek for it. So yeah, never ever think about, what are others going to think about me? So seeking help is, it's a strength for you, and there are a lot of people who could help. This is the one thing, especially in some of the communities or like our communities, we are hesitant to take small jobs. It doesn't matter how small or big. When things go wrong, when you are busy doing something, you meet good people, you meet new people, you may find something completely new. So even if it's a small job, take it. Keep yourself busy. So that's very important. So now, are there any? I know it may be a little bit. I'm not trying to scare here. It's only an educational webinar we want to bring here. So this is what even Albert Einstein says, and we have seen ourselves in either Wall Street, real estate, or many ways. In the middle of difficulty lies an opportunity. Definitely tell yourself, but of course it's not easy. It's easy to say, but it is true too. In the middle of difficulty, definitely there are a lot of opportunities. It's not me saying, it was mentioned by Albert Einstein. So opportunities during recession, definitely. Again, it's not me saying, Warren Buffett mentioned, opportunities come infrequently. When it rains gold, put out the bucket, not the thimble. Thimble means the one we use for the stitching, for our finger, so that we don't, the very small thimble means. So don't put the thimble when obviously you can't even catch gold, right? Gold coin, if it is a thimble, I'm just saying. So, when the opportunities comes, you don't want to buy 100 stocks, you want to buy 1,000 stocks, that helps you when it multiplies. Of course, it may go down, just because you bought a stock doesn't mean that it's not going to go up right when you bought it. So definitely, there will be opportunities. We'll be happy to help at IIG. So stay with us, stay connected. We are happy to help. So some of these are our, some of the, especially, I know we all want to financially strengthen ourselves. Some of the things that I like, risk comes from the ignorance. So definitely, it's not, I don't want you guys to take anything negative in any way. When we look at my friends or many people, when they buy the growth stocks, for me, I used to feel that's absolutely what he mentioned here. It's basically people took a risk and ignoring the fundamentals or whatever you call it. That's not, I'm not, but this is it. Risk comes from the ignorance, but if you know it, you won't take that risk. So no one knows the future. Same thing with the growth stocks or anything. Just because real estate grew every year 15-20% doesn't mean that future will be the same. Nobody knows the future. If you have seen that crazy growth, either it's a growth stock that grew like a 70% or what, 10x. There are stocks $35 to $350 stock. It's basically unbelievable what happened in the stock market last 2 years. People thought everybody is like a Warren Buffett. People ignored Warren Buffett. No, definitely. He has definitely great things to say, and we should follow. What I meant to say is growth stocks. We all expected, growth stocks will have a future, future growth. Have you seen the future? No. I'm not. What I mean is, I'm not saying that all these companies will close. No, they won't be closed. What I meant to say is they have been valued like 5 times or 10 times more than what they are probably worth. Then what does that mean? You need to be careful. So this is a pretty simple investing rule. Never lose money, but that's not easy. But anyway, that's one of the things. Focus on quality. Let's say if you want to buy an iPhone, you want to pay $1,000. If iPhone is available for $250 or $100, you are getting $1,000 quality iPhone, but you are only paying $200. I know it's not possible, but in the stock market, it is possible. So do I want to buy Apple stock at $3 trillion or when it is $1 trillion or when it is, so what I'm saying is, it is not easy for you guys to, if you don't have a financial, maybe, some of you maybe do it, but if you focus on the quality and the fundamentals, you know what to buy. Not just because everybody is buying. Again, when I say either Apple or any, even Microsoft or Google or anything, it's not about I like some company, I don't like some company. It's about your money. where will it grow? It's not about what company you love it. Where would it grow? So focus on quality. That is very most important. So if something is low, if the stock is, really good, then you should invest. Be fearful. That's what we were last 1 year. Even though we made good money on some of the stocks on the growth, but we are like, you know what, we are out. No, this is crazy. Be fearful. We were fearful when things were so much greedy last 1 year or 2 years. So fearful means you need to have a bearish strategy, whether you buy a puts or short. That's when, but you need to know, you can't do it every single stock. You need to know what is a bubble stock, what is a crazy stock, what doesn't have a fundamentals. We are here to help. Definitely, if you are part of IIG WhatsApp groups, we have shared a value investing. Look at it. How we did it, for example. So, and now we are greedy. We are definitely trying to be greedy on some of the stocks, but again, we are not going all in. Even Warren Buffett is not going all in. We don't want to. Even whatever the portfolios we manage, we don't go all in because we see there will be some more opportunities. We are trying to be very careful. We use sell puts, for example. So we are trying to be a bit greedy right now. I would say, there are some good opportunities. But with volatility, there is so much volatility in the market. We definitely see some opportunities. Some strategies that can help. So yeah, definitely we can help if you want it. So price matters. Price is what you pay. Value is what you get. Would you like to pay $350 for T-Dog, or would you like to pay $30 for T-Dog? Or I may pay $20 for T-Dog and wait for until it go up. T-Dog means Teledog. I'm just giving an example. Do I want to pay Rivian at $100 or $150? Rivian was valued from $100 billion to, I'm talking about Rivian. There was an IPO. Most of you may know. So again, I'm not trying to point you anyone here. What does Warren Buffett means price matters? Do we want to pay $150 billion? Even IBM, even it's a cash-rich company. They have extreme good profits and everything. To be a $100 billion company, that's what it takes. Snow. We have shorted our, we call it as puts, the strategy. When the stock goes down, we made money, our investors made money because we know that they're going to go down, but we never know that when it will go down. So that's why we take leap calls or leap puts. So price matters. When you are paying for a price, okay, any stock, either it's a growth stock or a value stock, what you should be paying for, and then always have a long-term view. You want to have absolutely a long-term view, not short-term view, basically. So invest with long-term view. There is a great saying too. Lot of general tendency or people thinking is people who overestimate 1 year. People who overestimated crypto 1 year, people who overestimated growth stocks 1 year, but people underestimate what can happen in the next 5 years or 10 years. That is where, this is not what I'm saying. I think there is a great saying, let me repeat it. In general, in the investing world, in general, people overestimate short term, like 1 year, overestimate, but underestimate the long term. So travel with us. We love to show you, how the long term you can have. So that's our success formula. We have a passion when we like it. You may have seen, people were thinking, oh, why we were selling lands in Florida. We did not sell lands in Texas, not much, but, because they were not, at least we did not see a value in it. When we sold Florida lands, everything is now 300% increase, not 30% like your home, 300%. You can go to our website, you can see. With passion, we share some opportunities and we try to make sure there is a productivity in the asset. And the lands we sold are not like crazy, like in Texas. You get a stock, you get a piece of paper, you own 1 acre land. Do you really own a land, or somebody else is hyping up and selling it? But anyway, I'm not trying to blame anybody. Everybody have a business strategy and all, but our success is we have a passion. we want to invest in the right assets, and we want everybody to be patient. I mean, there will be, I mean, at the end, you will see a profitability. I mean, that's how anything can work. So, okay. So I think, thank you very much, everyone. I appreciate hanging on. I think we just probably hit the 1 hour mark. So I think we have good participation today. I mean, so yeah, I did just last Sunday. I did with another. I mean, it's called letustalkit.com. We talked about it. There were 120 people. We did it. I mean, they were really happy with the session. I hope you have enjoyed too. But anyway, so.